Markets are buzzing with a mix of optimism and uncertainty as the S&P 500 and Nasdaq 100 climb to fresh records ahead of a pivotal U.S. jobs report. But here's where it gets controversial. While investors cheer record highs, the underlying economic story is far from rosy. Let's break it down. On Thursday, the S&P 500 surged 0.8% to a new peak, while the Nasdaq 100 added 0.9%. Asian traders kicked off the day with cautious optimism as U.S. stock futures inched higher ahead of Friday's highly anticipated August employment data. Meanwhile, Japan's Nikkei 225 index jumped over 1% after President Donald Trump finalized an executive order to implement his contentious trade deal with the country. Balash Pens, Bloomberg's Hong Kong-based news desk editor, explains how this agreement could reshape global supply chains and why some analysts are already questioning its long-term viability. But the real drama lies in the bond market. The U.S. two-year yield, a key indicator of investor sentiment on fiscal policy, plummeted to its lowest level in nearly a year. Money markets are now almost fully pricing in a Federal Reserve rate cut this month, with expectations of at least 2 reductions by year-end. This shift reflects growing concerns about slowing job growth, the weakest stretch since the pandemic, driven by rising costs, waning consumer demand, and yes, Trump's unpredictable trade policies. David Chao, Invesco's Asia-Pacific market strategist, warns that these factors are creating a perfect storm for employers, forcing the Fed to walk a tightrope between stimulating hiring and avoiding inflationary pressure. And this is the part most people miss. The jobs report isn't just about numbers. It's a political football. Will the Fed's rate cuts actually revive hiring? Or are they propping up a fragile recovery? Is Trump's Japan deal a win for American manufacturers, or a short-term fix with hidden costs? We asked the experts, and the answers were anything but unanimous. So what do you think? Are these market moves a sign of resilience, or a delayed reaction to deeper cracks in the economy? Drop your thoughts in the comments below. After all, in investing, the most valuable asset isn't just information, it's perspective.